And while I don't love the argument around total value locked, it's still something that people point to. Not everyone's going to get that A16Z investment right up front. If you're getting some of the smaller guys, they're going to care about your ability to have the right knowledge base.
How do you calculate your market size, especially in a sector like Web3? I mean, what's your growth potential? How should startup founders go about trying to answer this question? Because I know Thomas and I have seen some decks that have been pretty fantastical.
Yeah.
Can you offer some clarity here?
I at some level, I wish I could. But I think related to my last point, it's trying to understand certain metrics, right? And while I don't love the argument around total value locked, it's still something that people point to. And you look at similar tokens in the space. Again, this is for something that's really more token driven. And you look at similar use cases and how companies have progressed over time. I think that market sizing of understanding how the utilization and the growth has worked with some of these companies and the value that's locked on chain is a good starting point, because that's where the venture investors are going to come in at and look at and say, okay, is this something where, we're going to try to grab market share from this, or is this something that's similar? So it can be something like this, but it's its own particular kind of area of focus. Those are areas that I look at, and it's very industry specific, right? So, right now we're really focusing in on, I've brought up a lot of use cases around, call it, decentralized finance or DeFi. But you can look at like the gaming world, right? And, how that is evolving over time, and talk about an industry which is not gravitated towards the concept of the blockchain, right? And it's a very, very finicky space. I think it's coming back now, and I think educating the space is certainly important. But when I look at the comps in the gaming industry, right? That's a way to kind of market and understand market size and market fit there, particularly. But you can look at traditional gaming companies and see what some of the Web3 types of gaming companies, what they're doing and how they've kind of raised and what their market values look like. So, it is industry specific, and there are some Web2 kind of metrics that you can pull from. But again, once it gets down to the token, understanding the value that's locked in on a lot of these tokens and the potential growth and user retention around it are certainly factors that we would kind of try to hone in on.
So in essence, TVL, like velocity of user growth, and just really being au fait with the market and what they're looking at in terms of potential growth and getting some comparisons.
Yeah, precisely. Right. It's things that seem fairly obvious, but once you try to dive in and actually you spend time with some of these concepts, you can go down a lot of different rabbit holes, but you kind of need to go down that process, right? Just for an informational purpose, and just know that you can say, hey, this doesn't make sense here because we tried this, or we looked at this market concept and it doesn't really apply. But you want to be able to say that you've gone through that process at the end of the day.
And then, of course, defend your assumptions.
Yes, that minor detail, right?
Like be able to defend the assumptions that you're making when you're pitching for capital. All right, number 7, strategic decisions, and this is I think is one of the most nuanced questions that we've got here, but it's really about how strategic choices such as selecting business models or scaling plans impact the valuation from an investor's perspective, because we've got a lot more flexibility than Web2 here.
Yeah. Strategic decisions certainly are an important part of this. Is there a particular area around strategic kind of decisions that you want to focus in? Because there's everything from the technology that you're going to apply, right? Which chain that you're going to build on of, to, call it, corporate and structuring planning. Those are all kind of strategic decision hiring, right?
Yeah.
Those are all areas of focus which need a lot of attention, right? And just drawing back to kind of some of the things I said earlier, I think the strategy around how you're going to organize the companies, right? Are you going to have a foundation, right? Are you going to have like a governance token? Those type of strategic decisions on where you're going to take the overall business, it can't be underestimated in terms of the importance, right? Because that strategy is certainly important, and that fits into the industry that you're focusing in on, right? So if I'm going to build some sort of restaking, call it network, right? And what am I going to build that on? Do I have the relationships in place, right? Strategic partnerships, all of that is because this is so community driven.
Yeah.
At the end of the day, that if I don't have that in place and I don't focus in on that, the success rate is fairly low, right? It already is low just for anything, right? Just any startup. But if I'm not positioned properly with the right partners in place, which I think is really important, and I probably haven't talked enough about that, but having the right partners in place to help with some of those strategic decisions and not just on the legal and the tax side, but actually on the overall network, right? Who are the partners that are going to help build this out? Depending on what industry you're in, is certainly a very important factor.
Intangible assets. I think this is so. In like traditional accounting, we call this goodwill. I think in
Goodwill.
Web3, you can pretty much call it a lot of things, but your IP, your brand reputation, size of your community, these are all intangible, but are factored into a startup's valuation.
Yeah,
What's your
100%. In
rating
fact,
on that? Like how
yeah,
how much is that worth versus like we might have a great community, a brand that's really well recognized, but how do you attribute a number to that?
this is an interesting question because there's different ways to look at it. Yeah, to your point, like in the tax and accounting world, there's a very specific way of trying to value this stuff. But in this kind of environment, I would say there's a ton of value in that. Like when you are putting together a Web3 company and you see companies that, raise at, a $5 million raise on a $50 million, post, something like that. All the value really is in the intangible side of it, right? It's all there, right? And then the token in of itself, in theory, at that point, because it doesn't exist yet, right? But it's just the right to this token, the idea around it is a very small portion of that because, you don't know where that's headed. So what someone is really investing in is, the concept that maybe this token will be worth something, but the overall infrastructure and the network and the intangible, the brand, reputation, IP, even if it's open source, all of that stuff is where actually a lot of the value is. And so you can make the argument that when we are looking at, total value locked or market comps in general, that value at the early stages of things is all spread out through the intangible asset, call it concept of goodwill, really. It's all there. And then as the project matures and maybe it launches, right? The network launches, maybe you have a token, then the value kind of shifts, right? A lot of it goes in that pie, grows, and then the value associated with maybe that token, all of a sudden it becomes a huge piece of that pie. But until that point, right, all the value is in this concept, right, which is the intangible. So when you see those pre and post monies out there, I mean, that's really what they're investing in, right? The idea and the concept that this is going to be something in the future, but at very early stages, it's really more intangible than anything else. And you see that in the traditional world as well, without, the token concept, but, when people are putting in money on something that has no revenue, right? And we see it all the time, right? Like the vast majority of startups, they are a couple of years out from actually having revenue. And so they have to be investing in something, and it's usually that intangible concept where the value kind of exists.
Team influence. You did mention earlier, team is really important towards valuation. How?
Yeah,
I mean, some of these founders are first-time founders. Like,
yeah.
how does a team's background or experience like come into play here? And if you haven't got, you know, 5 years at McKinsey, what do you put on? Like, how do you demonstrate that value?
Yeah, this is a very interesting concept because, and it's a depressing concept for someone who's my age, because
Okay.
Now we're invested.
so, I mean, I say that because, and this has been happening in the startup world forever, though, right? A couple of kids come out of college or are in college, they come up with this concept because they have an understanding of trying to put the existing, industry on its head, right? And saying, hey, why does it have to be done? Because they haven't gone through the trials and tribulations of failure of, understanding how traditional business works. And so, that's why a lot of those fail. But there's, we have the success bias, right? Because the companies that we end up working with tend to be things that are going in the right direction. But yeah, like on the one hand, I say, it would be great to have, founders who have, 5 to 10 years of experience, have gone through this and struggled and figured it out. But in this industry, it just doesn't exist, right? So you have guys who have very strong technical backgrounds in things because they're coming out of university and they know other people who have been through this process. And so they've learned about it in somewhat an academic fashion. And then just through kind of hearsay of things, and they've developed a concept around it. And because of that technical, background, they're able to be successful. And so, that team can, albeit very young, can still be, do very well in this space. We see it quite often. This industry is very much focused on the younger guys, and understanding kind of, hey, look, we understand traditional finance. Again, I bring up, gaming is a perfect example. Those kids have been playing games forever.
Yeah.
Right. Yeah. And so they understand that very well. And so they know that, hey, this is why I'm pissed every time there's a blockchain game that comes out. I mean, I can talk to my son all day long about it. He's like, Dad, no one wants to do this. I was talking to someone on the Discord channel that blah, blah, blah. And I'm like, we'll get there. All right. You will, once you realize there's actual value here, you're going to say, how did this exist without it? Right. But yeah, like I think this is certainly skewed towards the younger demographic. What ends up happening, right, as we all kind of see, especially even older traditional startups, is that you have these projects, they start up, and then I don't want to use this terminology, but I'm going to anyway. But you get the adults in the room that come in later who understand the more corporate stuff that everyone hates to have to deal with, but you need it, to the point of like the things that we're talking about, like setting up the right entities and the right tax stuff and all that kind of stuff. Traditional finance, like you get a CFO or a real COO, stuff like that. Guys who know how to take the business to the next level. You get guys like that come in, but certainly the team influence or the team focus at the early stages is still incredibly important. And having guys who at least have the ability to have that vision at that point in time, no matter what age they are, is certainly one of the most important things.
It's interesting. We always said, like, you have builders, sustainers, and evolvers, and for every phase there is someone. And we, one of the things that we always did, and also ask our clients very often, is like, what are you? And then sometimes they come to that perspective. They're like, yeah, well, actually, I'm very good at evolving. I'm like, okay, well, that's great, but you're doing a greenfield project right now. You need to build. That means flexibility. That means craziness. Like, are you ready for this?
That's right.
And that's where the cracks sometimes start. But it is a really good question, I think, to ask yourself as a founder as well. It's like, if you come from corporate, you may be really good at sustaining or evolving, but not necessarily good at the flexibility of a builder. And vice versa, right? You Series A, do you really need that builder startup mindset? Maybe you need somebody who is better at sustaining and a piece of evolving, and that builder piece gets, a lot less percentage in making the right decisions because it's less relevant.
That's exactly right. Yeah, being able to transition to the next phase is a key point there. So I agree with you 100%.
Nice. So if you don't have that kind of history, what do you suggest they do on the deck?
If you don't have that type of history, I think this is where kind of partners come into play, right? And saying that you have the right network and relationships that you can lean on for a lot of this stuff is important, right? It's not expected that you would have the necessary like years of experience, but you want to make sure that whatever you're focusing in on, right, from an industry perspective and a use case perspective, you have the knowledge of, right? Otherwise, you wouldn't be building this. And then that you are positioned with the right partners or advisors, right, which are very key, that you can lean on to help with some of the other aspects that where you're not, like you may understand the use case, but there's other things that need to be considered that you have the ability to lean on anytime you can. So yeah, if I'm putting a deck together and I'm straight out of college or, I'm just young in general in the space and I'm investing in you, I want to know that you have the right network of folks that you can lean on. I'm obviously like if I'm a seasoned investor and I know the space, then, I'm going to bring my network to you as well to the extent I can. But candidly, at very early stages, some of these, you're going for angel investors, smaller investors. Not everyone's going to get that A16Z, investment right up front, And so if you're getting some of the smaller guys, they're going to care about, your ability to have the right knowledge base up front. So if you don't have it, making sure that you surround yourself with the right folks that do, are certainly something that I would care about if I'm looking at that deck.
Brilliant. All right. So question 10, exit preparations. So for startups looking to eventually sell or go public, are there any strategies you would recommend to ensure their valuation reflects their true potential? Any guardianship moves that they should make?
Yeah. So the Web3 space is a little bit different, right? We don't have traditional exits for the most part, right? Not everyone is going to be like, I'll just use Coinbase as an example, where you're going to try to go public and, that's kind of the success story. And then, there's other things that relate to that. But for the most part, most of these Web3 companies, the exit it's a little bit different. Usually it's centered around a token, and the token in of itself represents kind of the liquidity around the exit strategy. And so if that's the case and you're building something around that, then making sure that the tokenomics associated with your specific asset that you'll be distributing, you want to make sure you've thought through that process, right? Because there are a ton of tokens that go out there and just, there's no liquidity at the end of the day. Like if I move my, 100,000, tokens, it would effectively destroy the market, right? So in planning for stuff like that, you want to make sure that you understand how the market kind of would adopt and understand and move with this specific token at the end of the day. And that's incredibly hard to do that. But understanding that type of concept to the best that you can by looking at other market comps again is probably a good point to start with. Like if you want to be the next Solana, right? At the end of the day, let's follow their journey and let's see how they've moved through that process. How did they issue their tokens? What did their allocation look like? At the end of the day, how was that structure built, right? Because now that company is, you've got a whole network of people who are building on top of that. Is that something that I would like to do, right? Do I see like other partners coming in and building on my use case and utilizing that? And so then there's a revenue model associated with that relationship. making sure you've thought through that process, right, is incredibly important when you start thinking about an exit strategy, because it is rare to see, an IPO. We are starting to see kind of acquisitions out there a little bit, but it's still, in its infancy for, companies with tokens, right? We'll see stuff like, infrastructure projects, or like maybe some exchanges out there, or something that's almost like more traditional to Web2 companies that have, a Web3 kind of focus. But for the most part, a lot of these companies, the value, the expectation is really sitting around how like the token will operate outside in the network. So, those are things that you probably want to think about at the end of the day.